Good afternoon, everybody, and welcome back to the weekly market analysis for the week ending January 12th, 2024. 5-day week this week, first one of the of 2024. Next week, markets are closed on Monday, so it'll be another shortened week. As you can see, I've got the Bitcoin chart up first. We're going to actually do something a little different and start with that in just a moment, but I want to first remind you to hit the like button and subscribe to the channel. You can also find me on Mr. J. Thomason on Twitter X, and you can also subscribe to my newsletter, which is befinanciallyfree.substack.com. The links to both my Twitter and my newsletter are in the description of the video below. And I would also want to mention, I mentioned this in my video last week, that this year in 2024 I am sharing the content, the entirety of my content in my newsletter, free of charge for all subscribers, but you do have to be subscribed, so make sure that you go check it out. All right, here we are on the Bitcoin chart first. Bitcoin is currently in the middle of puking. It's down currently. The Bitcoin closes not for another 45 minutes at least in terms of the normal all-time index on TradingView, and it's currently down 7.63%. It was down a little bit further. The low for today coming in at 41,482 and currently at 42,810. And it's been an interesting 2 days in Bitcoin, because yesterday honestly, it's been an interesting while, we'll say that. Over the last few months, even going back to the fourth quarter of 2023, we've just had various news events that have really affected the price of Bitcoin. We've had false and bad reporting and different kinds of things going on, and more of the same this week, where we had a story come out. It might have been last week, but we had a story come out about the ETFs are a done deal. Then we had another story come out. There's no way the ETFs are going to get approved right now. They're going to be delayed. Earlier this week, there was a tweet from the SEC official account that said that that the Bitcoin ETFs had been approved, and then the SEC commissioner Gary Gensler, whatever his last name is, came out and said no, that was an unauthorized tweet, and so price had gone up had gone down and then gone up and then gone down again. And then finally yesterday 2 days ago, we did get approval on Wednesday for a launch yesterday. And yesterday was an interesting day. Yesterday's price action, we were up as high as almost 49,000 and ended up closing red on the day. And then today we basically have been essentially down the entire session. You can see the size of the red candle. There's barely any wick on the top side. So we didn't even overtake the open on the previous day's candle. We've just been down ever since. So obviously there's a lot of stuff going on. We've got the whole Bitcoin crypto community who's out there, talking about trying to find scapegoats for why price action is this way. If I actually go to my crypto set, so you've even got Ethereum with a reversal candle today. And honestly, we've had bullish catalysts, and yet the reversal candle today, and this is a true reversal candle, where we have the wick going higher than yesterday's high, and we have the low below yesterday's low, and the body of the candle, unless something changes in the next 43 minutes, the body of the candle will be below the low of yesterday. So it's a true reversal, and that would suggest that the price action on Ethereum is going to come back. I mean, go to Dogecoin, we're down 6%. Whoa, that's really interesting. I never noticed that. Cardano is down 6% as well. Basically the total cap down 5.5% to 6%, stuff like that. So obviously crypto bleeding today, And a lot's being made about it. Like I said just a moment ago, people are trying to find scapegoats. People have talked about all the unlocking of the GBTC shares and how people would be selling that. We talked about the inflows. In fact, let me go to, I'll go to the BlackRock ETF. It's interesting, there's only 2 candles. So obviously at one point what was the open? The open was 27.94. We got all the way up to 30, essentially, just about 30. Yeah, exactly 30. Came down and closed below. And then today, a minus 6% move in the ETF. And it looks like post-market close, it's down even further. So, and that's just one. If I went to any of the Bitcoin ETFs, it would be the same thing. The only difference is with GBTC, if you actually look, we're down a little bit less than some of the others, down post-market, which is pretty crazy now that this thing does trade pre and post-market, since it's not on OTC anymore. But it's down across the board on everything, and a lot of people are wondering, well, how can you have all of these inflows and still the price of Bitcoin goes down? And there's a lot to be said about like how redemptions work and things like that. But largely what you have to remember too is like these are based on the movement of Bitcoin. So just because people might be putting money into these different ETFs, and that might trigger the acquisition of or the creation or the acquisition of more Bitcoin, and that should drive up the price because the demand would be so high. If there are people who are selling spot Bitcoin, it's no different than buying, SPY. If you've got a lot of people buying SPY, but then, which is obviously going to mean that the underlying, which is the S&P 500 index, is going to get bought. But then you have people and all the different shares associated with that. But then you have people selling that. It can totally go down. So, I think that a lot of people are forgetting, like they're just assuming that just because money is coming in terms of inflows, that it means the price must go up. But that doesn't have to be the case. But anyway, I'm just highlighting it because one of the things, like I don't even know if I could find it in my timeline here on Twitter, but let me see if I can find it. I posted on January 10th, which was obviously 2 days ago before the ETF went live. What if there are indeed billions of dollars in inflows to the BTC ETFs, but price still goes down anyway? Of course, that's definitely that's what's happened. And basically, like so much of this, even going back to like BlackRock, which was back in, I think in August, that was Q3 of 2023, announcing that they had, I think it was in August, maybe it was July, but I'm pretty sure it was August, announcing that they were that they were also listing an ETF, and everyone kind of got excited. And then obviously we had the price action going into late October, where a lot of the ETF news and people who followed it really closely it was coming to light. Price has just been running up, and a lot of this, in my opinion, is early, pre-Bitcoin halving price action anyway. But all of this has been kind of bought ahead of time. Everybody, raise your hand if you didn't know that the Bitcoin ETF was coming, and then keep your hand up if you weren't also thinking that, hey, like if the ETFs are going to go live, then lots of new money is going to come in. I want to get in ahead of that. And I'm not saying that price won't. Who knows? For all we know, next week, price will go up. Price could go to the moon tomorrow. But I think like far too many people were expecting the news to like shoot Bitcoin up like 10, 20, 30% or something like that, based on the amount of money and inflows that might come in. And if that was your expectation, I don't know a single person who wouldn't have gotten in ahead of that if that was the thought. There were plenty of estimates about that. So basically, I'm just like going on and on about Bitcoin and the ETFs right now, just to say, like, you can't invest based on you can't invest as if something is certain. You have to understand your risk. So, I mean, and you have to take things like in context. I mean, if you saw what was going to happen this week with the approval, if you believed that that was coming, and you got in, back in December, then good on you. Or when BlackRock said that they were going to do an ETF, you got in, then good on you. If you got in right after the whole Sam Bankman-Fried thing with FTX, and you saw price bottoming out and you got in, great. I mean, look how high up you are. I just think that too many people are getting too mad about something. It's okay if this was a sell the news event, and sell the news events sometimes can take a while to play out. Sometimes they're really quick. I mean, look at my indicator, look at my tide line. Look how far Bitcoin's price is still above the tide line, right? I mean, if you want to look back in the last cycle, right, you have all of these, once Bitcoin's bull market really starts going, price never comes back to the tide line until we've hit this little peak in April 2021, right? And all of these times, look at how many, what was the pullback on this from the little wick? From wick to bottom, 30%. Price is not down 30%, right? So I think people just need to calm down. If you look back to pre-halving behavior, I mean, we had a couple of different run-ups and a couple of different drawdowns. I mean, in June 2019, we had a 53% drawdown, right? And that was before the little bull run going into early 2020, where we rose 45%, right? And then what happened after that? We fell another 50%. And then even if you bought at those peaks, you're still in good, you're still above water. So you just have to take these things in context, and do play the risk to reward properly. Because I can tell you right now, probably part of what's happening with Bitcoin's price is that too many people are levering up because they assumed that Bitcoin's price would go to the moon. And why would a person be using leverage on an asset that doesn't need leverage to get you 100% gain? I mean, if you go from the bottom, if you just go from the start of 2023, Bitcoin is up 160%. You don't need leverage to get outsized gains, right? But the problem is that greed takes over, right? People get too greedy. Getting 100% gain is not enough for some people. Getting a 50% gain is not enough. We got to lever it up so that way we make a lot of extra money. But that's exactly how you get wiped out. So anyway, the lesson in this is obviously you have to manage your risk, and you have to go in, believing there's a high degree of possibility that the trade can go against you. And if you have conviction and if you have enough risk tolerance, then maybe you can handle the drawdowns, right? If you can't handle the drawdowns, you got to keep your position sizing small, and invest a smaller amount of money that you are not afraid to see go down a ton, right? And if you do have the fortitude to handle the drawdowns, then just sit back and relax, or turn your computer off, get off Twitter, go eat some popcorn, right? Come back in a couple months, because I'm pretty sure that this thing is going to be much higher by the end of the year. So I'll leave that there. Really quick, let's go look at equities. On equities, we've got this interesting situation taking place where we've kind of, the last 2 days, we've kind of wicked up to around the highs that we got to at the end of 2023. We're just kind of it seems like we're just stalling out right here. And what I'm concerned about too is on the NASDAQ, also pretty much unchanged. Russell down, we actually got a reversal, almost a reversal candle here. Obviously the low didn't exceed yesterday's low, but price was up pretty high and then reversed and went down, and we closed lower. The Dow went up and then ended up closing lower. And the reason why this is a concern is today we had a fairly positive and dovish PPI report. So yesterday's CPI was interesting. It was a little bit hotter than expectation. But honestly, the market doesn't believe inflation is going to be a problem anymore. And then today we had the PPI release. And like if I go, let me go to the NASDAQ because that's usually pretty reactive. Sorry, I gotta fix my, here we go. Right, so if I pull back on this 1 minute chart, right, we had the NASDAQ, which was kind of up, or I'm sorry, kind of down from yesterday initially, right? And then right at, we have at 5:30, the NASDAQ jumped 43 points in 1 minute, and then we just continued to grind to the upside. We were up pretty far, came and gave almost all of that gain back, jumped up, gave almost all of it back, and then we just kind of went sideways. We were just kind of pinned the entire day, just kind of like in something that was getting a little bit smaller as we went. Right, so the dovish PPI print should have been market positive. It's my opinion. It should have been market positive. The markets have gotten extremely excited anytime anything has proven the general consensus that, like in this case, dealing with inflation, that inflation is going to go nice and orderly back to 2% or maybe even lower. This is the kind of report where, like, if you go back to last month, PPI being released, or the month before that, there were, I think it was 2 PPIs and CPIs in a row, but basically a bunch of price action was super positive right around the time where we had CPI and PPI come out. Market ate it up, market shot to the upside, right? This should have been more of the same, right? Especially after yesterday's print from CPI. The PPI today should have been something that the market saw as net positive, and honestly, markets should have closed higher. The fact that like they didn't tells me that something might be turning, and I don't have. This is just kind of a gut feeling. What I will say is I think that right now the market is giving you a great opportunity to take a stab. Now, if you're into shorting, and I don't really recommend it because it's so hard. It's hard to make money on the short side, especially in equities, but it's giving you a clear risk to reward. So if you look on the NASDAQ chart here, well, let me use the S&P chart right here. It's better. The S&P chart, like if you take the high from yesterday, on the which was the CPI print, which I forgot about that. The S&P, oh no, I expected that. So anyway, the high on the S&P print yesterday was 48.38. So put your stop at 48.40, right? It's clear risk to reward. If price breaks across that, that's a breakout from the highs, and you know you're wrong. But if you're not wrong, then like what if this falls from current? What if it falls 3%? All right, that's down almost 150 S&P points. What if it's 5%? Right, that's almost 250 S&P points. What if it's like 8%? That's almost 400 S&P points. What if it's 10%? What if we get a correction out of this? What if we get to 10%? That's almost a 500 S&P point correction, right? So I'm not saying to short, but what I am saying is you have a clear risk to reward here if you want to take a stab at it. And I think the risk to reward is even better when you consider that markets should have been up today, and they're not. Equities should have been up, and they're not. Equities should have behaved like gold, right? I mean, gold kind of came off of its high before the close, but gold reacted exactly the way that you would think. Now, there was also, gold was acting interesting before the PPI print. It did benefit. You can kind of see right here, gold did go up on the PPI, but it was already moving pretty substantially to the upside before that, in large part because of what the U.S. and U.K. are doing in Yemen with the airstrikes and things like that. So I half expected, gold to be up, right? But the fact that equities didn't do what they were supposed to do on the PPI print, and that has me thinking that we could be in a place where the move is exhausted. And again, move being exhausted, it doesn't mean we're revisiting lows, right, from 2022. It doesn't even mean that we're going to revisit the low from 2023 back in October. What it does mean is that the risk to reward of downside is much more favorable than risk to reward to the upside. Now, again, don't hear me wrong, equities tend to drift upward over time, but so I mean, if you just want to hold your nose and buy, close your eyes and come back in a year, more than likely prices will be higher. But or 5 years from now or whatever. But for now, the risk to reward on a trading basis, on a short-term basis, is to the downside. Like it's better to the downside, I guess. So take into consideration too, like the dollar still, like we went down to oversold with the divergence, and we climbed up a little bit, and we're just kind of grinding around this mid 102 level. And to me, if the dollar starts to move to the upside, and the positioning is suggesting that dollar shorts are getting crowded, and a lot of like the longs in like the euro, not the euro, like the Swiss franc and Canadian dollar, and I think the British pound too, are starting to get a little extended. So if the dollar if those reverse and the dollar ends up going up, then that's net negative for equities. And then the other thing I would be concerned about would be the yields, right? And I keep bringing this up, like, do you want the yield curve to continue to be inverted? I feel like that's just going to continue to be a problem. But we have all of the yields generally moving down. I mean, that's what you would expect on that's what you would expect on a day where the PPI came in below expectation. And this is another thing that's concerning. If the 10-year is down, right, if all of the yields across the curve, I mean, not the 30-year, I guess, but if most of the yields across the curve are down and equities can't even like muster a really strong positive day or even a decently positive day, to me that's concerning. Right, the VIX closed a little bit higher. It's closed above its highs from a few weeks ago. It's closing well above its or above its lows, I should say. It's been bleeding down, but I mean, how sustainable is that? The VIX can stay low, but eventually it's got to have some little spike action here. So that would be something I would be watching out for. And then and for me, a lot of this is economic in nature. I was actually expecting the CPI to be below expectation. It wasn't. It was actually decently above expectation. But the PPI was below, and it's interesting because like even with the conflict that's going on in with the Middle East, like with obviously the continued Israel-Hamas conflict, the thing with Yemen and the Houthis, and or I don't remember. Forgive me if I pronounced that wrong. But crude oil closed down. Well, I mean, I should turn the settlement on. I'm sorry. Crude oil was positive, but not nearly as positive as it should have been. Right? It was only up 0.92%, and at one time, we were up at $75. And again, like when you've got geopolitical conflict, investors are already getting pretty short crude oil. When you've got like all of this stuff going on, like when the dollar has been weaker, yields are dropping and stuff like that, like all the conditions for crude oil are there, and the fact that it's down has me thinking something isn't right. I kind of have this feeling something isn't right, which doesn't mean that like equities or other risk assets must go down. It's just something to be aware of. You need to have like your antenna up and be good risk managers here. Don't make rash choices. Keep your position sizing manageable. Have defined stops and all of that kind of stuff. The only other thing I wanted to check is the stocks trading above their 50-day moving average, which after getting above 90 and closing above 90 for the first time in a while, has been kind of coming down. So it'll be interesting to see what that means in the grand scheme of things. Stocks above their 200-day moving average coming down kind of the same way. So yeah, it kind of feels like the fact that equities didn't have a strong day could be a sign of some weakness ahead, but that remains to be seen. In general, the week was basically positive. We almost gained back everything that was lost last week. On the Nasdaq, we basically did on the S&P, but not so much on the Russell, and definitely not on the Dow either. So yeah, markets are not confirming each other. What should have been beneficial for equities has turned out not to be, or was not as positive as it could have been. And for all that, I would just say you got to be careful going into next week. But that's kind of my read. Just a quick take here today on a Friday afternoon. And I'm going to stop there and leave it at that. So thank you for watching, and I hope that you guys have a great long weekend, and I will see you guys next time.